there. So you sent over some really fascinating research actually on clean energy stocks.
Yeah.
And its connection to climate change.
Absolutely.
We're going to take a deep dive into a 2025 journal article.
Okay.
It's called
Right.
How Important Are Climate Change Risks for Predicting Clean Energy Stock Prices? Evidence from Machine Learning, Predictive Modeling, and Interpretation.
It's a mouthful,
I know, right?
but the title gets right to the heart of it.
Yeah.
Can sophisticated machine learning models predict
Yeah.
if clean energy stock prices are going up or down?
Right.
And do climate change risks factor into those predictions?
To put it simply, this deep dive explores whether we can use fancy computer models
Yeah.
to figure out if clean energy stocks are going to be winners or losers,
Mm-hmm.
and over several time frames from
Okay.
1 day
Right.
all the way out to 20 days of trading.
That's about a month.
Yeah.
Which in the stock market can feel like a lifetime.
Yeah.
So the researchers are looking at both short-term and slightly longer-term predictions.
Right. And what makes this even more fascinating
Yeah.
is that they're specifically examining whether climate change risks,
Okay.
like extreme weather events or policy shifts, actually impact these predictions.
It's a bit of a mystery, isn't it?
Yeah.
Clean energy is obviously a hot topic,
Yeah.
but does that translate into predictable stock market moves?
Right.
Let's see what their researchers discovered.
Okay, so they tested out a bunch of different machine learning models,
Okay.
which are basically algorithms that learn from data
Mm.
and try to spot patterns.
Yeah.
Kind of like training a superpowered detective,
Great.
analyze the stock market.
And just like with detectives, some are better than others.
Okay.
In this case, the real stars of the show were the tree-based models.
Now, I've heard of decision trees, but can you break down how these models actually work
Yep.
in predicting stock prices?
Imagine a tree with branches that represent different decisions or data points.
Okay.
These models use a series of if-then rules to split the data based on those decisions. For example, if inflation is high,
Yeah.
then clean energy stocks might be less attractive to investors seeking short-term gains.
So each branch of the tree helps the model narrow down the possibilities and get closer to a prediction.
Precisely.
Okay.
And the leaves of the tree represent the final prediction,
All right.
whether a stock is likely to go up or down. Two of the top performing models were random forests and extra trees,
Okay.
which combine multiple decision trees to create a sort of wisdom of the crowd effect.
Okay, starting to get the picture.
All right.
So how accurate were these models?
Yeah.
Give me the bottom line.
These tree-based models were able to predict whether a clean energy stock price would go up or down with an accuracy rate of over 85%,
Wow.
especially when making predictions 10 to 20 days out.
Over 85%?
Yeah,
That's seriously impressive. That means almost 9 out of 10 times
Oh.
they got it right.
exactly.
So does this mean we should all just dump our money into clean energy stocks and let the algorithms do their thing?
Hold on there.
Okay.
Remember, we still need to figure out if climate change risks
Right.
are actually driving these predictions.
Okay.
That's where things get really interesting.
All right, let's get to the heart of it.
Okay.
Do climate risks make or break these clean energy stocks?
Well, here's the surprising part.
Okay.
The study found that climate change risks weren't major players in predicting stock prices,
Really?
at least not in the short term,
Okay.
the 5 to 20-day prediction windows.
Wait, what? That seems counterintuitive.
Yeah.
You'd think all the news about climate action and the urgency of transitioning to clean energy would be reflected
You would think.
in how these stocks are performing.
It's a puzzle, for sure.
Yeah.
It suggests that there might be a disconnect between what we know about climate change and how the financial markets are actually reacting.
Okay, so if climate change isn't the driving force behind these predictions,
Right.
what is moving the needle?
Yeah.
What factors do matter?
That's the million-dollar question.
Yeah.
We've ruled out one suspect. Now we need to find the real culprit.
Okay.
The researchers identified a few key players.
All right.
And some of them might surprise you.
All right. Hit me with those aha moments.
Okay.
What are these factors?
One of the biggest factors was inflation expectations.
Okay.
In a high inflation environment, investors often favor companies that are already generating solid profits and dividends rather than those that are still in their growth phase.
So it's all about wanting to see quick, concrete returns
Yeah.
when things are economically uncertain?
Exactly.
Okay.
When the future feels shaky, investors get a bit risk-averse and gravitate towards more established companies,
Yeah.
even in the clean energy sector.
makes sense.
Yeah.
What else?
The research also highlighted those technical indicators I mentioned earlier.
Right.
Things like moving averages on balance volume
Mhm.
and the Williams accumulation distribution indicator.
Honestly, some of those terms make my eyes glaze over a bit.
I understand.
Can you break them down in plain English?
Think of them as signals that reflect market sentiment and momentum.
Okay.
For example, a moving average smooths out price fluctuations
Yeah.
over a certain period,
Uh-huh.
showing you the overall trend.
Okay.
If a stock is consistently trading above its moving average,
Mm-hmm.
it might indicate upward momentum.
Okay, so they're kind of like a mood ring for the stock market,
Exactly.
reflecting how investors are feeling and
Right.
what they might do next.
And these technical indicators turned out to be really important
Okay.
for predicting the prices of wind and solar stocks,
Okay.
even more so than for nuclear energy stocks.
So even in the clean energy sector,
Yeah.
short-term market psychology can outweigh those bigger long-term considerations like climate change.
That's what this research seems to suggest.
Okay.
But there's another factor that played a significant role,
Okay.
especially for nuclear energy stocks:
Mm-hmm.
economic policy uncertainty.
That makes sense. The nuclear industry is heavily regulated,
Yes,
so any shifts in government policy or support could have a big impact.
exactly.
Okay.
A stable and predictable policy environment is crucial for investors
Yeah.
to feel confident about putting their money into nuclear energy.
Makes sense.
And finally, we can't forget about overall stock market volatility,
Right?
which is measured by the VIX.
Now, I've heard of the VIX. It's kind of like the fear index.
That's right.
The stock market, right?
Exactly.
Yeah.
It measures how much prices are expected to fluctuate in the near future.
Okay.
When the VIX is high,
Yeah.
it means there's a lot of uncertainty and investors are getting jittery.
Right.
And this volatility factor was significant for all three clean energy ETFs
Gotcha.
the researchers looked at.
So it's a complex mix of factors at play.
Yeah,
Economic conditions, investor psychology,
right.
and maybe even a bit of FOMO
Sure.
driving those short-term decisions.
Yeah.
But here's what I'm wondering. All this forecasting is cool, but what does it mean for someone who's actually thinking about investing in clean energy?
Well, that's where the rubber meets the road. Right.
Exactly.
Well, the researchers didn't just stop at predictions.
Okay.
They took their analysis a step further
Okay.
and put these models to the test
Okay.
by simulating a portfolio.
Okay, now we're talking.
All right.
Tell me more about this simulated portfolio.
Sure.
What did they do?
They created a portfolio based on signals
Okay.
from the extra trees model.
Uh-huh.
Basically, if the model predicted a stock would go up,
Yeah.
they bought it in their simulation.
Okay.
And if it predicted a downtick, they held off.
Clever. So how did this portfolio perform
Yeah.
compared to, say, just buying a bunch of clean energy stocks and holding on to them?
Get this. The portfolio driven by the extra trees model absolutely crushed the simple buy and hold strategy.
No way. Really?
It generated higher returns and had lower risk.
Wow.
That's a pretty impressive win-win scenario.
Okay, this is fascinating.
Yeah.
So even though climate change risks aren't being fully factored into clean energy stock prices,
Right.
it seems there are still opportunities for investors
Yeah.
who are willing to use sophisticated tools like machine learning
Yeah.
to navigate the market.
That's right.
That's both exciting and a little unsettling, isn't it?
It is.
It makes you wonder.
If we connect this to the bigger picture,
Yeah.
it raises some important questions.
Like what?
Well, if financial markets aren't fully accounting for climate change risks,
Right.
what does that mean for the transition to a low-carbon economy?
Right. And are there ways to bridge that gap?
Yeah.
Or does this create opportunities for savvy investors who do understand those risks?
That's the beauty of these deep dives. They
Yeah.
always leave us with more questions than answers.
Speaking of questions, let's pause here
Okay.
and give you, dear listener, a moment to digest all of this.
Yeah.
We'll be back in a flash with part 2, where we'll take an even closer look at those specific climate risk factors
Okay.
and what they might mean for the future of clean energy investing.
Sounds good.
All right, so we've established that machine learning can be incredibly effective in predicting clean energy stock prices, but these models aren't placing much weight on climate risks,
Right.
at least in the short term.
Okay.
So let's dig into those climate risk factors themselves.
Sure.
The researchers focused on 4 specific ones, right?
They did. The 4 climate change risk factors they analyzed were natural disasters, climate change, international summits, and U.S. climate policy.
Okay, you briefly mentioned this before,
Yep.
but those seem like a really interesting mix
They are.
of what you called physical and transition risks.
Precisely. Remember, physical risks are the direct, tangible consequences of climate change.
Okay.
Think things like sea level rise,
Yeah.
extreme heat, and more frequent and intense natural disasters.
Okay, got it. So like the stuff that's already happening
Right.
and is only going to get worse.
Yeah, exactly.
What about those transition risks?
Those are tied to the global shift towards a low-carbon economy.
Okay.
They encompass things like changes in government policies,
Yeah.
the adoption of new technologies,
Mhm.
shifting consumer preferences,
Yeah.
even legal liabilities related to climate change.
So it's not just about the planet heating up.
Yeah.
It's about how the world is changing in response to that warming.
Exactly.
Fascinating. But how did the researchers actually measure these risks?
Yeah.
Did they send someone out with a thermometer and a windsock?
Not quite. They used a clever method called textual analysis.
Okay.
They essentially trained an algorithm to analyze a massive data set, thousands of news articles from Reuters,
Uh-huh.
to look for keywords and phrases
Okay.
related to each of those 4 climate risk factors.
Ah, so they turned news headlines and articles into quantifiable data points.
It is.
Ingenious.
And it allows you to capture how those climate risks are being perceived
Yeah.
and discussed in the media, which can be a good indicator of investor sentiment
Okay.
and how the market might react.
It's like reading the pulse of the news cycle
Well,
to see how it aligns with
yeah,
or perhaps diverges from
Right.
actual market behavior.
exactly.
So what did this textual analysis reveal?
Okay.
Were some risk factors more prominent than others?
No, there were definitely some intriguing patterns.
Okay.
For instance, the U.S. climate policy measure
Yeah.
showed a lot of fluctuation over time with noticeable peaks around election years
Okay.
and significant policy shifts.
That's not surprising given how politicized climate change has become
Right.
in the United States.
Indeed. The policy landscape can change quite dramatically
Yeah.
depending on which party is in power.
Right.
And those shifts in policy direction are definitely being picked up by the news media
Mm-hmm.
and presumably by investors as well.
Makes sense. What about the international summits measure?
Yeah.
Those big climate conferences often generate a lot of headlines. Did they have a noticeable impact?
They did create spikes in media attention,
Okay.
especially around major events like updates to the Paris Agreement.
Uh-huh.
But those spikes tended to be short-lived.
Almost like a sugar rush of optimism
A very apt analogy.
that fades pretty quickly.
It suggests that while these summits are important for setting global goals
Yeah.
and raising awareness, investors might not see them as having a direct, immediate impact
Okay.
on company valuations or stock prices.
So long on talk, maybe a bit short on tangible action,
Yeah,
at least in the eyes of the market.
that's right.
Interesting. Now, what about the climate change measure itself?
Oh,
You mentioned it was trending upwards.
Yes, and this is where things get a bit more sobering.
Okay.
The climate change measure showed a clear upward trend over time,
Uh-huh.
indicating that the issue itself is becoming more prominent in the media.
Meaning there's more coverage of climate change, science,
Yes.
impacts, and potential solutions.
And it's not just about scientific reports or projections. It's
Yeah.
about the real-world impacts we're
Mm.
already seeing. More extreme weather events,
Yeah.
rising sea levels,
Mhm.
disruptions to ecosystems and agriculture.
Okay.
Climate change is no longer a distant threat.
Right.
It's a present reality.
Yeah.
And the media is reflecting that.
Okay. So the climate change is happening signal
Right.
is definitely getting louder.
It is.
What about the natural disasters measure?
Yeah.
I imagine that's been on the rise as well.
Unfortunately, yes.
Yeah.
The analysis showed a concerning trend
Okay.
for natural disasters as well,
Mhm.
both in terms of frequency and intensity.
Right.
It's a stark reminder that climate change isn't some abstract concept for the future.
Yeah.
It's having very real consequences for businesses
Mhm.
and entire economies right now.
It's definitely getting harder to ignore those impacts.
Right.
But here's what's still bugging me.
Okay.
If all these climate risks are so evident in the news and the real world consequences are becoming increasingly apparent, why aren't they being more strongly reflected
Right.
in clean energy stock prices?
That is the million-dollar question, isn't it?
Yeah.
It's a puzzle that researchers and investors are grappling with right now.
Okay.
There are a few possible explanations.
All right.
One is that even though we know climate change is happening, There's still a lot of uncertainty about how it will play out in specific ways.
Uncertainty about the timeline?
Yeah.
Like how quickly different impacts will unfold.
That's part of it.
Okay.
But also uncertainty about the specific regional impacts.
Right.
We know that sea levels are rising,
Yeah.
but how will that affect coastal communities in different parts of the world?
Okay.
We know that extreme heat will become more common,
Right.
but how will that disrupt agricultural production in specific regions?
Okay.
These details are still being studied and modeled, and there's a level of uncertainty that makes investors hesitant.
So it's like trying to invest in a company that's operating in a rapidly changing,
Right.
somewhat unpredictable market.
Yeah.
Makes sense. What are some of the other explanations for this disconnect?
Well, another possibility is that financial markets are just notoriously bad at pricing in long-term risks.
Okay.
The focus is often on quarterly earnings, short-term gains,
Yeah.
and immediate returns.
Meaning the potential consequences of climate change
Right.
decades down the line
Right.
just aren't as compelling to investors
Right.
as what's happening right now.
Exactly. It's classic short-termism,
Yeah.
and it's a problem that extends far beyond the clean energy sector.
It's like ignoring that weird noise your car is making
Yeah.
because you're more focused on getting to work on time.
Right.
But eventually, that ignored problem is going to catch up with you.
A perfect analogy.
Yeah.
And that's why some experts are concerned that financial markets are underestimating the true costs of climate change.
Okay.
There's a worry that there's a climate bubble brewing.
A climate bubble.
Yeah.
Now, that sounds ominous.
It could be.
Are we talking about a potential financial crash when that bubble bursts?
Potentially.
What exactly does that mean?
The idea is that if markets are mispricing climate risks, certain assets like fossil fuel companies or companies heavily exposed to climate impacts could be overvalued.
Because their long-term prospects
Right.
are actually much worse than their current valuations reflect.
Precisely.
Yeah.
And when investors eventually wake up to this reality,
Yeah.
there could be a rapid sell-off, a sudden drop in prices, and a ripple effect throughout the financial system.
That sounds like a worst-case scenario.
It is.
Are policymakers and regulators aware of this potential risk?
They're starting to take it more seriously.
Okay.
Central banks and financial regulators are exploring ways to incorporate climate risks into their stress tests and regulatory frameworks.
Right.
They want to make sure the financial system is more resilient
Right.
to potential climate-related shocks.
So it seems like there's a lot of work to be done
is.
to better align the financial markets
Yes.
with the realities of climate change.
Absolutely.
But here's a thought.
Okay.
If markets are currently mispricing these risks,
Yeah.
could that actually create opportunities for savvy investors?
That's an excellent point.
Yeah.
If you believe that clean energy is the future
Mm-hmm.
and that markets will eventually catch up to this reality,
Yeah.
then this could be a time to buy in while prices are still relatively low.
But it's a risky bet, right?
It is.
There's no guarantee that those climate risks
Yeah.
will translate into tangible financial rewards anytime soon.
That's true. There are no guarantees in the stock market,
Yeah.
especially when dealing with complex, long-term issues like climate change.
Right.
But that's what makes this whole topic so fascinating. It challenges our assumptions about how markets work, how we value the future,
Yeah.
and what role finance can play in addressing climate change.
It also suggests that there might be a disconnect between the way some investors are thinking about climate risks and the way those risks are actually playing out in the real world, at least so far.
It certainly does.
So as we move into the final part of our deep dive,
Okay.
let's explore what this all means for someone who wants to invest in clean energy today.
Sure.
Given everything we've discussed,
Yeah.
is it possible to identify the companies that are best positioned to thrive in this changing landscape?
That's a great question to explore.
Yeah.
Let's delve into that in our final segment.
All right, so we've uncovered this intriguing disconnect between climate risks and clean energy stock performance.
Right.
And we've explored the complex factors driving those stock prices.
Yes.
Now, for the practical question,
Okay.
what does all this mean for someone who actually wants to invest in clean energy today?
That's the question everyone wants answered.
Right, exactly. Can we identify those companies that are truly poised to thrive in a low-carbon future?
It's not a simple answer, but I think there are definitely ways to make more informed investment decisions in this space.
Okay.
It's about going beyond the hype and looking at the substance.
So no more just picking the company
Right.
with the catchiest green marketing campaign.
Definitely not.
Yeah.
Greenwashing is a real concern.
Yeah.
And it's important to look beyond the slogans and PR.
Okay.
You need to dig into the data, look at track records,
Right.
and assess a company's actual commitment to sustainability.
Okay, so where do you even begin? What are the key things to consider when trying to find those truly sustainable and successful clean energy companies?
Well, one good starting point is to look at companies that are leading the way in terms of actual emissions reductions.
Now, companies that are walking the walk,
Exactly.
not just talking the talk.
There are a number of organizations that track and report on corporate emissions data.
Okay.
Look for companies that are setting ambitious targets and are demonstrably making progress towards reducing their environmental footprint.
Got it. Track records matter.
Yeah.
What else?
You also want to pay attention to companies that are investing heavily in research and development.
Okay.
The clean energy sector is constantly evolving,
Right.
with new technologies and innovations emerging all the time.
So companies that are on the cutting edge,
Exactly.
not just clinging to outdated technologies.
Look for companies that are actively developing and deploying next-generation solutions,
Okay.
whether it's more efficient solar panels,
Mm-hmm.
advanced battery storage technologies, or breakthroughs in carbon capture and utilization.
Makes sense. So emissions reductions and a commitment to R&D are crucial.
They are.
What else should we be looking for?
Don't forget about the regulatory landscape.
Okay.
Policy can be a huge driver in the clean energy sector.
Right.
So it's crucial to find companies that are adaptable and well-positioned to navigate those changes.
Meaning they can thrive regardless of which way the political winds are blowing.
Precisely.
Yeah.
Look for companies that are engaged in policy discussions,
Okay.
are advocating for smart regulations,
Mhm.
and are nimble enough to adjust their business models as needed.
Okay, so emissions reductions, R&D investments,
Yeah.
and regulatory savvy.
Yes.
Anything else?
One more thing, resilience.
Okay.
Climate change is already having real-world impacts,
Right.
and those impacts are only going to intensify.
Yeah.
So it's essential to identify companies that are building resilience
Mm.
into their operations and supply chains.
Resilience meaning they can weather a storm.
Ex-
Exactly.
It-
Figuratively.
Companies that are taking steps to mitigate risks from extreme weather,
Mm-hmm.
resource scarcity,
Yeah.
and other climate-related disruptions.
Okay.
Those are the companies that are most likely to not just survive,
Right.
but actually thrive in a future that will inevitably be shaped by climate change.
This is all great advice, but it sounds like it takes a lot of research and analysis to
Yeah.
really make informed investment decisions in the clean energy space.
It does require effort and due diligence.
Okay.
But that's why it's so important to do your homework, to consult with financial professionals who understand this complex landscape,
Right.
and to stay informed about the latest developments in the industry.
So this is not a set it and forget it type
Yes.
of investment strategy.
Definitely not. Active management and ongoing due diligence are key.
Got it.
The clean energy sector is dynamic and rapidly evolving,
Right.
and successful investing requires staying ahead of the curve.
Got it. So there you have it, folks.
Yeah?
Your deep dive into clean energy stocks, machine learning,
Right.
and the curious disconnect between stock prices and climate change risk.
A journey through a complex and ever-changing landscape.
We've learned that sophisticated algorithms can predict stock price movements with remarkable accuracy.
Right.
But those predictions don't seem to be fully factoring in climate risks,
That's right.
at least not yet.
Yeah.
And we've explored the reasons behind this disconnect. Uncertainty about specific climate impacts,
Mm-hmm.
the short-term focus of financial markets,
Right.
and the challenge of valuing long-term risks.
It's definitely a lot to think about.
But here's the key takeaway.
Okay.
Even though those climate risks may not be fully reflected in market prices today,
Yeah,
that doesn't mean they're not important.
I agree.
In fact, it may create opportunities for investors who are willing to do the research, understand those risks,
Right.
and bet on a future where clean energy is not just a necessity,
Yeah.
but a lucrative investment.
As always, the most important thing is to stay informed,
Right.
to keep asking questions, and to approach complex issues with a critical and discerning mind.
Okay.
Don't just follow the hype,
Mm-hmm.
dig deeper,
Yeah.
look at the substance,
Yeah.
and make informed decisions that align with your values and your understanding of the world.
Until next time, keep learning, keep exploring, and
Yeah.
keep diving deep.